Welcome to the Valuation Desk by Highland Global, where SBA business valuations speak bank. I'm excited to dive into a valuation topic that's often misunderstood but critical for small business lending: the discount for lack of marketability, or DLAM, and why it matters even for controlling interests in privately held companies. The businesses SBA bankers lend to aren't listed on stock exchanges. Their owners can't just sell shares with a click. Marketability is about turning an asset into cash quickly, at fair value, with minimal hassle. Traditionally, DLAM applies to minority interests, which lack control. But what about controlling interests, where the owner calls the shots? Should they face a DLAM too? Yes, even with 100% control, turning ownership into cash takes time: preparing the business, hiring brokers, negotiating and closing. That could take months or years, during which the owner bears risks and misses other investment opportunities. That's a real cost of illiquidity. Let's look at the evidence. Researchers like Christopher Mercer use models to quantify DLAM, factoring in holding periods and risks, showing discounts apply even for control-level stakes. Private equity studies reveal that exiting controlling interests can take years, with hefty transaction costs. IRS guidelines and AICPA standards suggest DLAMs for controlling interests typically range from 5% to 20%, depending on industry, assets, and exit options. Now let's explore how DLAM fits into valuation methods. The asset approach adjusts a company's assets and liabilities to market value, like a fair market value balance sheet. But even at market value, assets like specialized equipment, patents, or niche real estate aren't instantly liquid. Selling them takes time and effort, even with control. So, when valuations aim to reflect what an owner could actually cash out, appraisers may apply a DLAM at the enterprise level. Next, the income approach, specifically the capitalization of earnings method, is preferred for SBA 7A valuations. Appraisers convert future cash flows into value using a capitalization rate, often tied to the weighted average cost of capital, which relies on public company data, like equity risk premiums, that assume high liquidity. Private companies don't have that. Using these benchmarks can overstate value, so a DLAM adjusts for the lack of relative liquidity. For example, a $10 million enterprise value, based on capitalized earnings, might face a 10% DLAM, reducing realizable value to $9 million due to a 2-year sale process and 5% costs like broker fees. For SBA 7A loans, DLAM is critical. It ensures collateral reflects what's actually realizable, not an inflated figure. Misjudging DLAM could make a loan riskier than it appears. The key to DLAM for controlling interest comes down to 2 measurable factors: time value of money and transaction costs. Time value means a 1 to 2 year sale delays capital use, so appraisers discount proceeds to today's value. Transaction costs, broker fees, legal work, business prep, cut into proceeds. A $10 million valuation might net $9 million after costs, and DLAM reflects that. Lenders, don't assume control means instant liquidity. Enterprise value isn't what an owner can pocket next week. A well-applied DLAM, whether at the enterprise or equity level, grounds valuations in reality, reducing your risk. Controlling interests hold power, but not a magic wand for liquidity. Time, costs, and markets stand in the way. The appraiser's DLAM is key to ensuring SBA 7A collateral values are realistic and loans are sound. Thanks for joining us for this episode of the Valuation Desk. When you need clarity, confidence, and credibility, experience makes all the difference. At Highland Global, every appraisal is backed by decades of expertise and thousands of completed reports. We don't just crunch numbers, we provide insight, context, and defensible conclusions that lenders can count on. Whether it's a business acquisition or equipment appraisal, our seasoned approach helps ensure your deal moves forward with precision and trust. For more information on valuation-related topics, be sure to visit our website highlandglobal.com. Lenders know experience matters most.